The GOP healthcare plan could be bringing big changes to your coverage, but it is likely going to affect your wallet as well. Joining us now to explain all this and much more is Jeffrey Saviano of Ernst & Young. Jeffrey, great to have you here.
Nice to be here.
I know your specialty, at least in this regard, has to do heavily with the tax code changes and certainly tax cuts as it directly relates to this new healthcare bill. Yeah. Certainly very controversial. What could you tell us about what the tax cuts mean, presumably for the wealthiest Americans under the House Republicans' plan?
Well, today is a big day, right? As we're watching it, we could have a vote today in the House, and that's really important. We've been waiting for this day for a while now. And I think, as we've all been watching for this repeal and replace, right? Repeal the Affordable Care Act. Republicans have been so intent on repealing and now replacing it with something else. First, looking at the repeal side, there's what we've been calling the individual mandate, this requirement that we all have to have affordable health coverage. We have to have health insurance. And if we don't, we pay a tax on that. That's the current law today. If we don't have health care coverage, we pay a tax. The same holds true for employers. Employers have responsibility. We call that the employer mandate. They have to provide affordable health coverage to all their full-time employees. If they don't do that, they pay a tax under the current law. So it's an example of how they're using the tax code as the hook to get individuals and businesses here to have insurance and to offer insurance to your people.
So then who are some of the winners and losers in terms of the people that will be most affected by not having these tax cuts, or perhaps what's the new tax incentives that will be in place?
Well, I can tell you that to replace that, so those are the individual and the employer mandate, as that goes out, something else has to come in. Mm-hmm. And what would replace that is a series of tax credits. So you would have these refundable credits ranging from $2,000 on one end to up to $4,000. $2,000 if you're in your 20s, $4,000 if you're in your 60s. Those credits will be available to offset the cost of health care coverage for people. So it's getting away from the mandate and the tax if you don't have it to let's provide you with an incentive so you can go and buy insurance in the market.
But these credits you're talking about, that is really at the heart of one of the main pieces of controversy when it comes to this piece of legislation, because the CBO, Congressional Budget Office, nonpartisan, that part may be up for debate. Essentially last week, polling statistics, and they say, look at this average American, age this, income this, or whatever. They're saying under the old plan, maybe that person earned $13,000 or $14,000 in a federal tax credit. Now under this system, if that woman is 68 years old, like you said, she only earns $4,000.
That's right.
In your estimation, how do those metrics compare between the two bills, and how big of a deal is that?
It's a big deal. It gets very complicated. Once you go from the old regime to this new regime, and on top of that, the more that you make as your income goes up, then they scale back those credits. So for higher wage earners, they won't receive much benefit at all. I think one of the other issues they'll have to address are some regional differences. If you're sitting in a high-cost place like New York and California, coverage could be much different than other parts of the country. So it'll be really different going from one regime to the other.
Yes. Can you break down for us exactly the proposals behind the border adjustment tax and what that really means for the average consumer?
Sure. Okay. So once we get away from healthcare, so hopefully, and as we see that we'll have a healthcare bill could pass the House today, the next order of business is tax reform, and that'll happen at some point after the president and Congress has said they really want to take up healthcare first. Move away from healthcare to tax reform. The border adjustability is a very interesting provision. No other country has a provision like this. And what it says is that they will exempt export sales from the computation of business taxes. They will exempt anything that you export. And on the import side, they won't permit a deduction. So they'll tax it. So they'll tax you on the import side, and they will exempt it on the export. You can see what that would happen for investment back in this country. And that's what the president has been so intent on, is proposing new laws that would entice businesses to locate jobs and capital investments right back here in the U.S.
And there's a lot of controversy, especially when it comes to not only the retail sector in this regard, but especially small retailers who say a lot of them who need to export a lot of their goods are really going to get slammed. The National Retail Federation saying this would crush small retailers. As it applies specifically to that group, what can you tell us about the potential implications of this 20% border adjustment tax?
There are winners and losers, and you have highlighted one of the sectors that would be particularly hurt by it, because if you look at how the tax works, they import a lot of goods. They don't get a tax benefit anymore on that import side. So now on the flip side, if you are a net exporter, and if you export quite a bit and you manufacture right here in this country, you're going to do okay. So there's winners and losers under this bill.
And let me push back on this real quick, because one of the things that the supporters of the bill say, well, this is obviously going to raise the value of the U.S. dollar. How would you respond?
Oh, I think that's one of the most complicated areas under this, and it's so important. In order for this to be truly revenue neutral and to help those who are a net importer, they need the dollar to move in a certain way. And if we had 50 economists with us today, 25 may say yes, and 25 may say, I'm not so sure about that.
Well, right now the dollar index is up on the day. Thank you so much for joining us, Jeffrey Saviano of Ernst & Young.